Welcome back everybody into another daily recap. Today is Wednesday, the 15th of February, and we're going to see this nice range on gold because, as you already know, the price action on gold was quite null, quite nothing. And we can see we moved into a range between 1839 and 1831. Still good for scalping, but not really much to say on an overall high time frame. As you can see, the 50-minute time frame has been in a big order block or big range since this morning for London session up to now. We just moved between our strong PSA and just like a 50% retracement of this overall move from the last. Even this is previously during the pre-London session. So we had this impulse, we moved down and then we stayed below. Yes, we touched at the 61.8 retracement all the way back down. It's still a 80 pip range, but still, if you can see, it is quite a barcode. What we had today was this retail sales data. As you can see here, we had a quite well improved retail sales from the USD. We're coming from a minus 1.1%. Was expected already an increase, but the consensus was 1.8. It actually, the real data, the actual data was 3%. So it's actually very good for the US dollar. Also here, the control group from January was quite increased. Of course, now we're coming out of the season, the holiday season. The retail sales are very seasonal, so it's a nice improvement. But as we're going to see, didn't really affect much the markets, and especially on gold. So let's jump into it and let's see on the 1 minute, starting from, this is the pre-London session. As you can see here, we have a very nice price action, very structured. As you can see here, we have the creation of order block, retest and move down, another block, a retest of these lows and moving down, another block, the retest of the lows, and then a continuation down. Very structured market. As you can see, very bearish but very identifiable with lower highs and consecutive lower lows. So absolutely clean and textbook, I would say. Then as an impulse from 1843 down to the key level 1836, we had a short bounce like a 20 pip, and then continuation down to this newly found PSA. This is on the 15-minute, this PSA 1832. If you go on all the way back, you can see that it gave some nice reaction. As you can see here, it was an area where the liquidity was left and gave a very nice rejection and very nice reaction. So that's actually a relevant 15-minute PSA for the bounce up. So as you can see here, we can also identify 1, 2, 3, 4, 5 taps during London of price failing to make new lows. As you can see here, we are failing to make new lows, and even that's why we start being in a range, because we start also to fail to make new highs. Because as you can see here, we can also have a PPL indicating us that we are actually failing to break above this PPL for multiple times. As you can see here, 1, 2, 3, 4 times. And that's where the whole London session went, in this small range between 1837.5, I would say, and 1834, because it's even a smaller range just through London, with the rejection of the highs and of the lows. So this is the price action through London, and then we're going to see through New York with the data coming in. So if you remember, have this 1838.7 PSA, you can see, you can identify that this liquidity area is still maintained even after this whipsaw due to the improved retail sales. There's still quite a mixed market structure. If you simply identified the sells due to the fundamentals and due to the price action, you can see that, okay, price is, let me just place like a replay like here. Price is staying below our PPL. We made a new lows, we retested, and then we have the continuation. That's where you could have entered here. Of course, to be safe, you will only enter below these previous lows, because that's the actual PSA. Of course, now this is rounded to the PPL, but the actual PSA, you would want a break below this level. You want to have like a rectangle over here and say, okay, below this level, that's where I would enter. But anyway, if you enter here, that would be a small loss, a control loss, because when you see that the price is failing to make a new low and is actually getting back to your entry, breaking above your entry PSA, that's where you could have taken your smaller loss than expected, because then you see that impulse is quite strong. Then what we see is exactly this one. We still have on the other side, we went from the bottom of the range to have some confirmation for buys. You would want a break above this level or even above this level, because this is the 50% retracement that I was talking about. If you go on the 1 minute, and let's delete this, let's delete the PPL. You see the lows, that's where you would love to see some reaction at 50%. Makes absolutely sense because it's actually this level, or maybe you can expect it further up to this previous PSA if the liquidity grab is much stronger. As you can see here, we have first pullback, then a continuation bullish, and then what we are waiting for exactly the rejection at that level. Price actually breaks above, closes above. So let's see, we still don't have confirmation for buys because we don't have the retest, and that's why you have your confirmation for sells. Maybe you enter at this second, third candle. Stop loss has to be above, exactly above this PSA, and trying to take it all the way back down to like 50, 70, 60 pips. And that's where you see you also have the safer entry confirmation, let's say below this level, because that's the break retest of the key level. So that's where you could have added some position, or if you were just waiting for confirmation, adding like a smaller position just down to this level, 30 pip with 2 to 1 risk to reward. And that's where you go back to your gets very close to your stop loss, but you get to the previous level. On the downside, it's 28 pips. You see a bounce, and then you can decide if you want to stay in it or actually get out for a smaller scalp. Let's see here how the price continues. Yeah, that's when you went all the way back up. Let's see if we make a double top. Now we are at the new stock exchange opening. Let's see if it breaks above. What we can see is that, okay, price is staying at this level. So our trade idea for the first trade was still valid. You could take the first stop, or you could wait for further price action. Still same entry, same stop loss. And that's maybe, okay, you wait for a safer one, multiple confirmation. Otherwise, you just stay in your position, and that's where you have with volume and volatility continuation down. I will take the position out at the key level due to the fact how many rejections we had at this level, and still like a 46, 49, 50 pips TP for both of them. That's yes where you have a spike down. That's yes 60 pip move, but I mean, just to be safe, it's better to be safe. And now we have London close coming in, and yes, that's where London close. We have a further bounce back up. Of course, now we are still in a bearish trend because we have this double top here happening. We have a lower low, and we want the confirmation of price failing to break above here, or especially breaking above here for further sells, because what we can identify is that price made a new lower low. So we can also place the retracement tool to see if we can have a reduction at some specific PSA. As you can see here, the key level and the previous matches the previous PSA at 61.8, or we can also have a further rejection at 65% retracement due to this previous or the block lows. But I would love to have a rejection here for further continuation down. Okay, as you can see, taps 75%, and then looks like it's going to continue bearish. And there you go. let's see if you go all the way back down to the previous PSA. Now you make a double bottom here, so that's where you could have taken your sells. This the first confirmation. It's even 15 pip. So as you can see, it's perfectly 15 to 45 pips TP. So easy, absolutely as expected. 25% retracement. There you go. Understanding that the price is still, even if it's not very clean, is making still lower lows after failing to make a new higher high. So that's where you could have taken bearish scalp. And apart from that, the price action is just ranging. We still failed to make a new high over here. I don't know if this is the previous PPL. As you can see here, we have the rejection here again. But now what we are making is higher highs and higher lows. On the intraday time frame, we can identify that the price is making a bullish correction market structure. We are still failing to break above, even here very recently. But of course now the volume is much lower. And I mean, if it would have taken further scalps over here, would have still been a nice 45 pip with a 15 pip stop loss. So you would have further scalp opportunities at the same rejection at the same level. So that's pretty much it. Okay guys, and yeah, I will see you guys tomorrow.